what's up? This is Neo. Welcome back to Star Invest. Today, my screen, suddenly my monitor went down. So right now I have nowhere to look for my whatever script that I have typed and whatever I have made ready for you guys to share. But I will edit it in within the video later before I upload it on to YouTube. Okay, first thing first, the market crashes, right? Yes. Remember in my previous videos, if you have been watching my channel, I have mentioned multiple times that in Q1, normally stocks see volatility. The reason also being we have a new chairperson for the Federal Reserve Bank, and the market has to have some time to monitor if this new guy on the block will be hawkish or dovish. Yeah, even though we have certain expectations, but when it comes to real actuality and how he may think of our economy going forward, especially, and whether he see lowering interest rate is more beneficial to our economies, we have to have some time to see what he thinks and see his direction, what direction he's taking. So now we are in this situation. So I have already prepared for this. I sold off Palantir at 180. I sold off Robinhood at 135 leash. I sold, actually for the very first time, I sold 500 shares of SoFi at $27. Actually between 27 and 27.15. Today is 25 cents per share. Yeah, 21 plus. So did I actually expect this big of a drop? I actually did. Reason why, I already actually have set a buy order for 1,000 shares of SoFi at $20 even. Okay, I tell you why. I have been with the stock market for over 23 years. Actually 24, 25 maybe. Actually 26, oh my god, 26. Yeah, almost 26, almost. My first interest was in buying Amazon stock. And I bought it at $10 per share. It went as low as $2.78 per share. It was before the 1-to-20 stock split of Amazon. So whatever I am saying is before the stock split, okay? $2.78 per share. I did not buy and I saw it trending up and I bought at $10 per share, even, almost even, right? And then I sold everything at $12 per share. Why? Because Amazon from 10 dropped to maybe $7-ish and then went back up to 10. I was already thinking, should I sell at 10 to break even? And then the next day I didn't do much. The next day I did not do anything. Then the next week came, and then it shot up to almost 12. And I was thinking, should I set an order? Okay, set an order, sell at $12 per share, and it did so. Get sold. And then now what happened? If I didn't sell, Amazon would be now at 200 times 20, right? Because it was the 1-to-20 stock split. So over $4,000 per share. But I sold at $12 per share. And now it is supposed to be over $4,000 per share. You see what I have been missing? That over almost 400x gain of Amazon. Subsequently, I did trade in and out of Amazon. I did gain a few thousand more dollars. But compared to the 400x, and I'm supposed to be sitting at 2 million plus on Amazon stocks right now, that really triggered my anger a little bit, if you will, towards myself, why I didn't hold, right? Okay, now coming back to SoFi. You probably bought it at maybe $17 per share, $18 per share just last year, or even $20 per share, $25 per share. Some newcomers who just learned SoFi by the end of last year. Oh, this is such a nice bank or such a nice online-only financial institution. I have one-stop shop experience with their app. It's so seamless. Oh, their stocks are good. Oh, I'm buying it at $30 per share. Somebody who just learned about SoFi Technologies, right, at the end of last year, 2025. Yeah, they love the company so much they could have bought the shares at $30 per share or even higher. Now what? You love the company so much at $30 per share. Now, it's 32 to 33% off for you. It's under $22 per share. You love it even more. Because why? The reason why is also what this video is about is the Q4 earning result for SoFi Technologies for 2025, right? I expected only 940 to 980,000 new members for the quarter. SoFi exceed my expectation. It was more than 1 million new members. And I was expecting on the high end only 980, on the low end 940, and now we have more than 1 million per quarter. Starting now. It's a new era of SoFi. It's keep on grabbing market share from its competition. Am I not right? Otherwise, how do you explain that so many new members are still joining SoFi year after year, quarter over quarter? And the number is increasing too per quarter. It's not decreasing number, it's increasing number. Try it with Wells Fargo and Bank of America. As a matter of fact, we will discuss about something great news for today from JP Morgan, okay? Now, I also guide SoFi Technologies per share, earning per share, EPS, as will be coming in at 13 cents per share, which exactly meets what SoFi just delivered. Most analysts were expecting only between 8 cents to 11 cents per share, EPS. But SoFi actually beats them and meets my expectation at 13 cents EPS, okay, which is wonderful. And their revenue growth is more than 1 billion coming in for the last quarter, Q4 2025. 1 billion per quarter revenue. So we should be comfortably expecting for this year, 2026, SoFi will be at least at the minimum 4 billion revenue. Last year's was what, 3.5-ish billion, and this year will be coming in another 30 to 35% higher. Most likely closer to 4.5 or even 5 billions. Because remember what? They have the SoFi technology platform. They have new deals with United Airlines, Southwest Airlines, and then Wyndham Hotel, etc. And also T-Mobile with their SoFi at Work and other new companies which are bringing SoFi potentially 17 million new members as they try out other products of SoFi. Now, it is for sure SoFi is on a very solid footing, regardless of what the stock market think about SoFi. SoFi is growing steadily at a faster and faster speed and with higher and higher profitability as well, because their net profit margin comes in at 17%. Last quarter was only 13%. So it's another 400 base point higher, meaning 4% higher. As SoFi scale, as its flywheel effect continue to roll, the ball going downhill like the ice, the snowball effect, rolling downhill, forever rolling bigger and bigger and bigger. This is how SoFi will also not just cater in volume of membership, but also volume of product usage per user, per member, right? So now let's say you are a new member this year. You come to know SoFi and you just start with one product, which is their checking account or saving account. But next year you may apply for personal loan. Next year you may apply for auto loan. Next year you may be buying a new house and need a mortgage. Next year you may be using SoFi at work and try out how to monitor your benefits with your employer, right? So you will be using increasingly more and more products of SoFi, as other members would as well. But then in order to acquire you as a new customer, SoFi has to spend maybe $300 to acquire one new customer because they have those referral program. But once you are in their membership, you are in the flywheels of products of SoFi, meaning they can cross-sell you other loan products, other financial products, other insurance products, and other travel products to you, as SoFi also has travels. So in order to get you from using just one product or two products of SoFi to using 3, 4, 5, 6 products of SoFi, that is costing SoFi $0 amount in order to get you from just a couple of products to using multiple more products of SoFi. You see what I'm saying? Once you are in, you are logged in, and then the flywheel effect to get over time to get members to use more products of SoFi, it just costs less and less for SoFi. The flywheel effect as SoFi scale, its economic of scale will enable SoFi to see lower and lower cost per member, but at higher revenue and higher profitability and higher net profit margin. So SoFi is growing very nicely, growing at a very fast clip at over 35% annually, year over year for revenue. It's actually coming in at 37%. Wow. But whether the stock market in the short run appreciate that piece of news is irrelevant. Why? Because we are here for the long term. Treat ourselves as the CEO of the company. Do you think Jeff Bezos, when in 2008, all the stock market, because of the financial housing crisis, in 2008, 2009, stock crashed? Do you think Jeff Bezos, after seeing his Amazon stock crash 30%, 40%, would he sell? No, he's there for the long term. He knew the company will be much bigger in the future. Did Netflix CEO sell his share during stock crashes? No, he is there to lead the company for the very long term. And if he sold at $40 per share for his Netflix shares, then now it's over $600 per share, right? You miss out the other many times in return. So we are here for the long term. Short-term fluctuation, we should always expect as a long-term investor. Stock don't just go up. And let me give you a few examples, especially this time this year, after the crazy surge of stock prices in 2025. For example, Applied Material. In April of 2025, which was just 9 months ago, was only $4 per share. Applied Material shot up to almost $50, $60 per share. No, 40 something dollar per share. I take that back, which is over 10x. And now, last month, it crashed down to 22, 23, and now climb up back to about $32, $33, $34 per share. It is a fast growth company for sure. The revenue comes in crazily. The demand for its products, especially the cooling system for data center, AI data center, is so huge. The demand for it is so huge. The company has issue meeting demands with its own supplies. That's why traders and investors beat up the stock price too much and make the stock price crash from 44 back to 22, 23, and now it's go back up again because a lot of new investors still think the company has a very good future and they are trying to get in now. But it was only $4 plus under $5 for sure per share April of last year. IREN, another hot data center stock. It was originally a Bitcoin miner, very successful Bitcoin miner, already profitable. And why not just use those profits onto something else where it can grow their profit or whatever they make, each dollar make another $5 for them, right? So they spend 50 cents to make $1. Now they reinvested $1 into data center from the Bitcoin mining and make $5. So 50 cents to $5. Genius. Why? Because they have huge access to cheap power. An AI data center needs a lot of computing power. Those computing power consume a lot of energy. It is said to be up to 10% of the whole USD energy needed for AI data center by 2030, and in the long run, as much as 30% of our total USA consumable energy. That crazy. Now, SoFi triple beat and guide the low end at 60 cents per share for 2026, which I think with the history of management beating top and bottom line, meaning revenue and per share earning, I believe SoFi will handsomely beat this 60 cents per share EPS very handsomely in 2026. I believe will be closer to 70 cents per share or even 80 cents per share. JP Morgan, the bank that we just talked about, just had a big news for SoFi investors. The bank previously was neutral, has a neutral rating for SoFi, and I think the stock price target was about $22 per share, if I am not wrong. But they up it because of this explosive growth, solid fundamental of SoFi, especially after the recent 2 capital raises. Now they have more than 3.3 billion in their account, and they can start buying out company for strategic expansion to overseas markets especially, or they can use those 3.3 billion to lend out as new home loans, which is crazy because SoFi saw their home loan segment just shot up over 90% year over year. The demand is crazy. Even interest rates are still kind of high. Can you imagine when interest rates continue to go down, which is expected? SoFi will see even higher demand for loan financing, mortgage refinancing, credit card refinancing, auto loans refinancing, and all the new mortgages for SoFi. It's gonna be crazy. And SoFi is not even guiding with those expectations of even lower interest rates. They are just assuming there will be no more interest rate cuts when they still guide 60 cents EPS. It's so crazy. It's a very solid company with increasing market share for sure. Now, go back to JP Morgan. They increased the target price for SoFi 2026 to $31 per share, which is more than which is about 50% higher than today's price at 21 plus and minus per share. And the highest price target from analysts for SoFi is $38 per share. But they are guiding all these after the Q3 earning result. So after this new Q4 earning result, there has been only one upgrade for so far, which is from JP Morgan. Imagine some analysts will be projecting SoFi, upgrading it to over $40 per share soon, right? This reminds me of Robinhood 2022, 2023. When I bought, it goes up to 10, 12, and then it crashed to 8, go up to 10, 11, then crash to 7, go up to 15, then crash down to 10. Many times I was so sad. But if you are a long-term investor, you want to take advantage of every single crash, just like what SoFi is doing now. Robinhood saw over 90% year-over-year revenue growth, right, in 2024, 2025. Then the stock price went from 10, 15 to 150, 10x. AppLovin saw over 70% year-over-year revenue growth. Its stock price went from around 15, 20, all the way to 600, 720 before this latest crash to 400 plus, right? So you have a period in the last 2 years in which you have seen stock shot up over 10x, 20x easily. Then we should expect more volatility this year, especially. And especially also, we have a new chairperson for the Federal Reserve Bank, which the market has to see if he is hawkish or dovish. Whether he see our economy is still great going forward, and how many rate cuts does he think that we need. Then the market, once this uncertainty will be erased, the market will go up again. But for these couple of months, expect more volatility, even though companies continue to have great news from their quarterly reports, such as SoFi, but expect more volatility. But to us, which are for long term, we are long-term investors, take advantage of every single great dip. Thank you guys. Thank you for watching. Love you guys all. Have a wonderful, wonderful day. Sorry about the inconvenience. I don't really have any data now. Hopefully I will fix it soon. Thank you. Love you guys all.